right, here we go. Let's get started. This is a good one today. You know, some days we come in, I'm like, oh, am I going to talk about it? I mean, I have so much to cover today. And, you know, I really should extend the show because there is just so much to cover. But I try and limit this to like just a couple of topics. So come on in, everybody. Come on in. Let's get started here. While we're chit-chatting before we get into the two main topics today, I did want to mention that we have this district attorney in San Francisco who many of you heard about. He's super left. He said he's not going to, when he was running before he was elected, he said, I'm not going to prosecute quality of life crimes. Meaning that, you know, if you're homeless on the streets and you're going to the bathroom on the streets or you're shooting up on the streets, he's not going to, you know, even pretend to arrest you. Like, at least in the past, the previous district attorneys never said that, but he just said it. He ran on it and then he won it, and he said, that's what I'm going to do. And so, you know, we have, so it's not just that, it's all kinds of crimes. And that are happening that he's not prosecuting. And he's been defending himself, saying, I am prosecuting stuff, and I'm doing this. But in any event, I mean, he's a serious leftist guy. His parents were part of the Weather Underground, which was the 60s radical group. And if I got the story right, as I recall, they were robbing a bank in order to fund their activities. And his mother and father were like on lookout. And in the course of the crime, I think off-duty policemen got killed. One or two people got killed, and his parents are in jail for life. And so, like, he, you know, ended up being adopted by two other famous Weather Underground people who actually bombed, banks. Bill Ayers and Bernadine Dorn. Those are. I jumped out of the frying pan into the fire. This is our district attorney. So in any event, there's we're starting to get the kind of like kindling going, and it's like a little spark to get him recalled, and he's very tense about it. The recall thing is starting up. Somebody started a petition. One of our Republicans started a petition to get him to resign. It's toothless, doesn't really mean anything, but it is an interesting little indicator as to what the appetite is to get rid of him. And it's you know, it's an online petition, so it's a little, you know, but it's a good gauge, and like 15,000 people signed it like that, like in a very short time, and over 2/3 of them were Republican, were Democrats. So not a good sign. We may actually have an avenue to send a message to people like him. And by the way, it's part of a larger problem. So we have this voting system in the city of San Francisco called ranked choice voting. And God, I really don't want to get into ranked choice voting because we have two goofy. So we've got ranked choice voting on the municipal elections, and then statewide we got top two. I'll do a whole show on those if you're ever interested, or, you know, for people who want to get into the specifics of that. But with ranked choice voting, look it up. It means you get to vote for multiple people, and when one candidate drops off, the second and third choices roll up to the remaining candidates, whoever gets those candidates and gets those votes. And the progressives in San Francisco have been unbelievably good at leveraging ranked choice voting. So if, like, for example, we have 11 supervisors. We have a board of supervisors. San Francisco is a city and a county. So we don't have a city council. We have a county board of supervisors. We have 11 districts, 11 supervisors, and 10 of them are progressives. The 11th isn't all that unprogressive, but she's sort of moderate, I suppose. But the 10 of them are progressive. Now, listen, San Francisco is very left, but I can assure you that 10 out of 11 San Franciscans don't agree with that board, which means the board isn't representative of the city of San Francisco. And we, and as a result, we get policies out of here that don't really reflect what the true politics are. So in any event, some good progress on Chesa Boudin. Okay, let's get into the big topics today, which are first and foremost this whole business with Nancy Pelosi and insider trading. So Pelosi, Pelosi. There was a story about Pelosi in on 60 Minutes. I want to say it was 2011. Steve Croft did it. where he went after her for, hold on one second, I'm pulling this up, I want to see what's going on, where he went after her for insider trading. She Visa was going public. Visa, the credit card processor, and Visa is a Bay Area company, and she was voting on legislation that was going to directly affect them, and she created it positively. And so, Marius, show me the comments on Periscope. Yeah, thanks. So she was voting on legislation that was going to benefit Visa, and in the meantime, they gave her friends and family shares as they were going public. I mean, that was one egregious thing. She's done multiple insider trades well, and she just looked like, she was offended that he brought it up, and it was just, In any event, so we haven't heard much about it until recently. So Joe Biden makes this announcement that the U.S. government is going to buy his fleet of about 645,000 electric cars. And lo and behold, it turns out that Nancy Pelosi and her husband, presumably her husband, bought options valued between $500,000 and $1 million in Tesla, an electric car company. So, in that time, now the story's a little convoluted, but the strike price was $500 on Tesla, and I don't know what Tesla was trading, but let's just assume for a second that it was it was trading around $500. The stock is valued. They cashed out when the stock was valued at $890. So that means they made $390 a share. But here's the thing: they were doing it with options. So I'm assuming that they had, so it's basically, it's a levered trade. I mean, it had to have been worth millions of dollars to them. Meanwhile, last year, Kelly Loeffler was charged, or, they investigated her over trades that she did, where she, had inside information, and she ended up being cleared by that. But so what do we do with Pelosi? Pelosi is the leader of the House. She's supposed to be the person who, initiates these kinds of investigations. Is she going to allow these people to investigate her? Is she going to get impeached from this? I don't know. This is the sort of stuff you wonder why they fight so hard, so tooth and nail hard in Washington, D.C. for their positions. Maybe this sort of, explains why. They want the action. They want the inside action and the power. So anyway, this is just another outrageous thing about Nancy Pelosi. Part of, putting out this policy, all these policies that hurt working class people. Meanwhile, she just makes a little trade that makes her millions of dollars. This is another day at the office. Nancy Pelosi. I have to tell you, I was, if one of the things I'm going to try and do is tell you what I would do if I were in Congress. First thing I would do is I would ban insider trading. Ban insider trading. We'd have a lot of investigations, but you only really have to get one or two to start and really burn congressmen, put them in jail for doing it, and it all stops. But they can't inside trade. They just can't do it. It's not right. And so if I were a congressman from here, from some other district, but I'm running here, that's what I would do. I would ban it. And I think that Pelosi needs to be investigated immediately. Somebody needs to take that, that reign. In fact, I'm going to reach out to a couple of people, a couple of congressmen I know, and see what we can do about that. Okay, so there's the latest Pelosi outrage. All right, now I want to go to kind of a bigger topic for today, which is this whole GameStop business. Hold on a second. So, GameStop. All right. I think people know what the story is by this point. Do a quick recap so we can follow along. So GameStop is this store where you can rent video games and buy video games and accessories and all sorts of stuff. Stock was shorted by an outfit, I think, called a hedge fund called Melvin. And I don't know the backstory. I don't know why they picked on these guys, but a bunch of small investors on Reddit got wind of this, that these guys at Melvin, I think their outfit was called, was shorting GameStop and driving the price down. So they all came in and said, hey, let's buy GameStop and drive it up and nail these guys. Because what happens is when you short a stock, you basically if one person, let's say this person, say I own GameStop, Melvin comes to me and says, hey, I'll give you a little fee. Let me borrow your shares for a while, and you give them your shares, and then anyway. So I don't want to get. I'm sorry. I don't want to get too sidetracked on this. So you borrow the shares, and then they wait for the stock to go down, and then they buy them back. They take the cash, they sell the shares, and then they wait for the stock to go down, and then they buy the shares back and give them to me, and then they keep the cash difference if the stock goes down. The problem with the shorts trade, though, is that whereas if you buy a stock expecting it to go up, your losses are limited to when the stock goes down to zero. But the problem is when you do a shorts trade, there is no limit to your losses because you can just keep going higher and higher and higher. And so that's what these guys are doing. These small investors, they just wanted to bury this hedge fund. And so here's where we get into the scam. So what happens is these hedge fund guys have relationships with the business press. They go on CNBC. I don't know if they do it on Fox Business so much, but CNBC is sort of notorious for this. They'll get stuff in the Journal, Investor Daily, all kinds of, financial rags, and they start working it and try to drive that price down, get the message out that the fundamentals are bad, and they're just relentlessly pounding it because they have this position. They need the stock to go down. But here is the real key part of the story that no one is talking about. At least I haven't seen it. Maybe they are. Some people are, but here's the real scam. See, the problem is that these big hedge funds have access to borrowing money in ways that you can't. They have all these assets, and they say, even though they don't own the assets, it's really other people's money. They go out and they borrow against other people's money to do these trades, to juice up the returns on these trades. So, like for example, if they make $1 million bet on something they really like, they can say, "Oh, let's borrow $1 million and make it a $2 million bet. If we like this deal, we think this deal is going to do well for us at $1 million. It's going to do twice as good if we do it at $2 million." And shoot, sometimes these guys will lever up like 10 to 1. And I'm sure that's what happened here. They levered this up with options and then borrowed against the options to make it happen. That's the pain that they're in. So this Melvin company is in big trouble. They had to go to another big hedge fund called Citadel to get bailed out. But I don't know. Nobody has super deep pockets. Nobody's pockets are infinite, And so that's the thing, is that those guys have access to borrowing money that you and I can't have. And in the meantime, the small trading companies, they have so much power that these small retail trading companies, the companies that are supposed to be there for the small retail trader, like Robinhood and Ameritrade, have cut people off and said, you can't buy anymore GameStop. So they're basically siding with the hedge funds. And it's exposing this big problem, like how this game is kind of rigged. And it's a real problem. But I want to come back to the leverage. Because people like Bernie Sanders talk about the wealth disparity in this country. AOC talks about it. Elizabeth Warren has spoken about it. Tons of people talk about it. It is a Democrat mantra. Interestingly, any Democrat city you go to, the wealth disparity is the worst. San Francisco is the most liberal city. This is the toughest congressional race in America. And yet we have more billionaires per capita, and we have than any other place in the world, and we have more homeless people than any other place in the United States. We are the picture of wealth disparity. We're like third world country wealth disparity in this city, run by Democrats, run by Nancy Pelosi's machine. And so they're constantly lecturing us about this wealth disparity. And I have to tell you, I agree with them. It is a problem, and it's unnatural. It shouldn't be this way. Now, the Bernie solution is just steal their money and give it to the government. It doesn't, by the way, that doesn't make people richer, the people on the bottom scale. It just penalizes to some extent the people who are wealthier. But of course, the people who are wealthy and they have power because they've got their money. So what do? They say, yeah, we got to tax the rich. We got to tax the rich. And meanwhile, they throw tons of money into the Democrat Party to make sure that the policies that the Democrat Party are constantly selling never get enacted. That they never get enacted, and that the people who are super wealthy stay super wealthy. So, and here is the real trick, and this is the thing that Bernie doesn't talk about, that AOC doesn't talk about, Elizabeth Warren, none of these Democrats talk about. The thing they don't talk about is the leverage. See, what creates the wealth disparity is that rich people have access to borrow more money. And when rates get down as low as they are and as low as they've been going down for 35 years, pretty consistently going down to the point now where they're laughable. The 10-year is at about 1% right now. So that means that people can borrow money for 10 years, borrow $1 million, pay $10,000 in interest. I'm just using rough numbers here. And they can say, oh, if I borrow that $1 million, can I make more than $10,000 a year off of that $1 million? And they go, sure, I'll put it in the stock market. And then a bunch of these people take the money and they put it in the stock market. All these wealthy investors, wealthy people who can borrow the money at really low rates, they push them into things like equities. They push them in things like real estate and drive those prices up. And what does it do? It gives them leverage to make them even richer than the poorest people in the country. They never talk about it. They don't want to talk about it, specifically the Democrats. Bernie might, but he never does. But he might be willing to have that conversation because he actually voted to audit the Fed. But the Democrats never talk about this. They just blame greed and Republicans. Meanwhile, the Democrats represent the richest people in the country right now. And so this is the big scam. The wealth disparity is caused because we have these unbelievably low interest rates. But we're in an interest rate trap right now. We were in rough shape when we had $19 trillion in debt. Shoot, I was talking about this 10 years ago when we had like $7 or $8 trillion in debt. Now we jumped up to 19, and then COVID hits, and boom, the whole thing explodes. And now we're going to be, by the time Biden is done with this latest round of COVID giveaways, we're going to be at $30 trillion of debt. $30 trillion. Think about that for a second. We have a U.S. economy that's not quite $20 trillion. This is like we can never pay this money back. Never. It's a joke at this point to pretend that we could. But the problem is that if interest rates were actually to go up to where they would be, go up, say, let's just say where they are now, they'd have to go up 500 basis points. That means that federal interest payments, just to service that debt, would go up $1.5 trillion. The whole federal budget's like $4 trillion right now. So that means they would have to dedicate 40% of the federal budget just to service the debt if they let interest rates go up. So they can't. So interest rates are going to be low for a long time. That creates another problem, which I can talk about in terms of the business climate. But what it's definitely going to continue to do is increase the wealth disparity problem. So if I were in Congress, truth is, I don't even know what, when we're at 19 trillion in debt, I think there was a way to develop a plan that would take a generation to pay down the debt to something more reasonable, to allow interest rates to go up. By the way, people who are on a fixed income need interest rates to go up. It benefits them, right? Because if you're in a fixed income, you can put something in a very safe investment and get a guaranteed rate of return that you can live on. Seniors are getting crushed, putting themselves in super risky investments they shouldn't be in because interest rates are so low. But that's what we could have done. We could have started paying down the debt and allowing interest rates to creep up. At $30 trillion where we are right now, I don't even know. I don't know. I don't even know what we do. But I think what we could do is try and pay it down a little bit and then just start raising rates and dealing with the consequences of a lot of bad debt in the world and start a liquidation. That's what I would try and do. I would certainly try and get the federal government to reduce its spending. But shoot, even if you got the federal government to reduce its spending by $1 trillion a year and earmark that money. Let's say you ran, I'll take that back. They were running deficits before. Let's say you get the federal government to run a surplus of $1 trillion a year, which is not likely. Think about it. Take 30 years to pay back this debt. Maybe not quite that much. Maybe 20 when you factor in net present value and increases in spending and that sort of thing. But the reality is that we're in a really tough spot, and the fact that no one's talking about it is really terrifying, because they're just means that the train is barreling down the tracks. It's completely run away. None of the grown-ups are even willing to be the conductor and take control of the train. So anyway, so that's the deal today. That's what I'm going to talk about. I think that's really kind of enough to cover. It's a big topic, but the key takeaway here is that this wealth disparity problem is caused by unnaturally low interest rates. It creates all sorts of additional problems, and until we start understanding that, we're really going to be in deep trouble. And it also sort of exposes the unholy alliance between the Democratic Party and Wall Street, and they're getting their way right now. So, in any event, I'll come back to some more positive topics. There are good things to cover moving forward. Lots of good stuff going on that I think we can hope for a better future moving forward. It's tough though. It's a tough time, but let's see what we can do. If we got 75 million people to turn out to vote for Donald Trump, there's definitely hope, and there's hope because I think America is basically a place with good, decent people who want to do the right thing and who ultimately will prevail. So let's leave it on that upbeat note, and it's always great to do these. Today was a particularly interesting one for me, and I look forward to chatting with you on Monday. Have a great weekend, and we'll see you then.